Hi, this is David with the ENZO trading system. This is the post-mortem of the year 2021 as far as our system goes. What kind of performance, obstacles, and technologies we developed. Coming out of the 2020 was relatively easy. Back then we were only trading a spot market and only on Bitcoin. And we ended the 2020 with almost 120% profit with 26% maximum drawdown. It was actually a lot easier to track performance because we were only on one market. There was no dynamic leverage. There was no position sizing or portfolio management to deal with. And it was also a fairly good year because at least the last couple of months of the year, there was a major bull run, and it's actually what propelled us from about 50% profit to almost 120% profit. 2021 was definitely different. I divide the year in three major phases. The first one was the first 5 months. There was a lot of exuberance. The market was going up, and leverage was showing very good potential and actual profits. It was followed then by the summer, where the phase but for the market and for us was one of decline, and then the last 2-3 months where we finally reached newfound stability, which I think should continue well into the future, but we'll see about that. To see more in detail, the exuberant phase of the market was when it touched first all-time high at about 65K, and we introduced initial diversification. Only 4 major coins added to Bitcoin, and these were on the way up. It didn't work so well on the way down. In fact, what happened on the way down, the main problem was really that the diversification on the negative side of the market didn't go as well as on the positive side of the market, because all those major coins, they followed Bitcoin quite closely, and even with more volatility, and so it was more negative volatility. This is the phase where we decided to speed up the work that we already started to optimize more in terms of maximum drawdown, and optimize both the expectations, both the live and backtest level, from pure profit to profit over risk. And also we started adding more markets because we realized that those initial 5 weren't clear enough, and we had the support for Bybit. And then we did some internal refactoring, which was useful to continue to add features. The last part of the year, it's where I think we reached finally the stability that I wanted to see. This was a further change of the algorithms, where now the focus it became really more from optimizing for any specific market to optimizing to an ensemble of markets. So we now really focus on working with the 15 plus markets, and the algorithms, they don't they may even if an algorithm doesn't work well with some of the markets, even if for example an algorithm doesn't work well with all of a sudden doesn't work well with Bitcoin, the system doesn't really care. We'll allocate the position sizing and the portfolio management. Will allocate the resources to any other market that goes well. For example, the last week, most of the profit came from Atom coin, while Bitcoin is not producing anything. This is both due to the market and in part also due to the algorithm. So in this phase, I think we pretty much feel confident coming into the next year. And we did track performance this year as well, although not as closely, because there were a lot more variables at play. we didn't have just a single, we didn't reserve a single fund for pure tracking without any leverage. The fund that we use for as a reference had several changes in the leverage that we use and the market that we applied, and we ended up with a plus 20%, which I mean, it's a positive, but it doesn't really mean much considering that the fund is at using 4x leverage, and that at the peak it was at about 1,000% profit. So that's quite a bit of a drop in terms of the maximum drawdown. So I consider this as a performing poorly. We underperformed, but yeah, I think the best part of the year was actually the last one, not the one where we made a lot of profit, but this one where I think we're managing to have a relatively flat profit curve, even though the market has touched a new all-time high, and now it's been like 2 or 3 months going downhill, at least from the Bitcoin point of view that we're using as a general reference. So a list of things that went right and wrong, which I already mentioned. What I think went right is actually the maximum drawdown, although it was painful, it was within the expectations. And we didn't incur into any liquidations. By design, the system doesn't allow liquidations because we have a per position risk management, namely stop losses, and those are what prevent the catastrophic losses that could otherwise incur into total loss of the fund. But yeah, the maximum drawdown was within expectations, more or less. The issue is that the expectations were a bit too low in a sense. Meaning that we knew what was the risk, and we were willing to undertake that risk. But on a hindsight, it would have been better to optimize earlier for reduce the maximum drawdown. And but I mean, this is also a matter of actually being able to put the work into it. So thankfully this year we managed to complete the work that we started on the diversification, position sizing, and the portfolio management, which are all integral part of the system now. And so we did renew the focus, the profit over risk instead of simply profit. And we started introducing this more generic algorithms, meaning that the algorithms now are really meant to work on multiple markets at once. I think this is a more reliable approach to really kind of require a portfolio of markets rather than attempting to make algorithms that are really optimal for a few selected markets, because individual markets are just by themselves unreliable. Another thing that went right, I think we increased the production of videos like this that I'm doing. Put personally quite a bit of effort on keeping in touch with the user base and make sure that what needed to be reported was reported. And also, I'm happy that we managed to finally add Bybit as an alternative to Binance, not just because it's a new exchange that was needed, but also because the work itself of adding an additional exchange is going to make it easier to support more exchanges in the future. What went wrong? Yeah, that again, the initial complacency with the maximum drawdown, with the expected maximum drawdown, and also the initial sense that the major altcoins may have been good enough as a form of diversification, something that we eventually realized it was not. Another most subtle thing is the pressure to build a system that generates more trades. This is due in a big part because to have more trades automatically means almost automatically means to have better statistics of backtest. So it should make for a more reliable system, one that generates more trades. Although it's not always true, and especially in this case, I guess it wasn't true, because when you have a lot more trades, to some degree, it may also correlate to have a system, a set of algorithms that overfit more the market, meaning that they're a little bit too much tuned into the past. And another reason for generating more trades, especially when we didn't have as many markets, is that we felt a little bit of a pressure from users to have a system that continuously is continuously active. And also more trades also means more referrals. So our the big part of our income comes from the actual trading that we do, but also the referrals from the users are a portion of the income. And at this point, because we generate a lot less trades, that's been greatly reduced. But I mean, the goal is really that of making more profit. But still, while developing, while we weren't sure whether we really needed to do less or more trades, I mean, a system that does less or more trades, we would edge on the side of err on the side of more trades because of all this all these points. Another problem, I would say, but not really a problem. I mean, I don't tell users to try to time the market. When somebody asks me when is a good time to come in, I would say anytime, because you never really know. But because also in the long term, even if you incur some loss, ideally if the system continues to work out as it should, eventually one will make up the losses and go back into profit. However, there is this tendency, of course, of new users to come at times when the market is really close to a new all-time high, and this tends to correlate to a subsequent drop of the market. So what happens is that most of the new users come at a time when it's more likely the market is more likely to be close to a drop than to a bull run. So long term is not really an issue, but psychological level can be quite annoying. And speaking of that, we underestimate a little bit that the stress that can derive from drawdowns, especially when using leverage, because yeah, it's very good to see great profits, but the drawdowns can also be quite lengthy. It can take several months, and they can be quite frustrating. And it's easy to kind of see the worst of it. I mean, to think the worst of it, because the general perspective on how the management of the risk works is not necessarily too clear, because I think a human mind tends to extrapolate linearly. So current losses may seem like they never end, or current losses they may seem like they're going straight to a complete loss, but that's actually not the case if one starts to think in terms of percentages rather than quantities. I made a video about this that goes more in detail, but yeah, that's the gist of it. And yeah, there were also questions about possibly losing more than what one invests. This is not possible, but there are fears that can go around and can frustrate people. So to conclude on this, personally, I consider 2021 as a pretty valuable year. I'm quite happy at where we are at right now. I think it's a very dynamic year that has shown the potential for great profit, the risks, and also highlighted the weaknesses, the stuff that we had to do. And as we are right now, I have a lot more confidence going forward. So it could always go worse, as it happened many times, because I've been I mean, we're in February will be 4 years that I've been doing algorithmic trading full time, and I've seen a few many times um, very good profit, and then eventually you find out that you have some weakness, or maybe you suspect you have some weakness, and then it comes to light. And what happened in 2021, I'm happy that is happened this year rather than next year, when we'll probably have a lot more invested. So it's better sooner than later. And I think, yeah, I'm pretty happy with what we are with the diversification, with how we changed the model for evaluating the performance that is now based on the relationship between profit and risk, the stability that we reached. And I think, I mean, next year should be quite good. I can't, as usual, I can't make any promises because it seems the more you promise, the more you end up into trouble. But yeah, it should go well. We'll see. Only time will tell, really. But we're definitely in for the long haul. As I said, I've been here working on this for almost 4 years, and I'm pretty positive. I've seen there are ups and downs, but overall, I've seen the progress. As the more and more I understand, the more and more I see great potential in this endeavor. So that's pretty much the project that I'm going to drag on for a while, forever. We'll see. So if you have any comments or questions, I'm always open, whether it's on YouTube comments or Discord chat or email, whatever. Until then, let's see how it goes, but have fun, and see you next time.